right. Let's see what we got here. Open up my Tasty Trade account. Looks like we all the trades got filled, but looks like markets are down. We'll see. Again, they start up or they start down and pretty much end up flat for the last week, which I don't mind. I do not mind that that's the case, but we'll see what's going to happen. Again, let's see. You got Thursday, which more than likely will flatten out because it was down like 30 to. Oh no, actually, I think it was because of GDP reports. Yes, that's probably why it was down. GDP reports. I think that's what had happened. Because you have all these major reports and you got non-farm payrolls. You had an ADP report that came out bullish for their so-called economy, but bearish for markets. Then you have, it should be bearish, but it wasn't. It should have been bearish. So, but it wasn't bearish. Theoretically, that's what you would think, that it would be bearish for markets. Okay, what do we got going on here? Okay. So SLV, deltas on SLV are a little out of hand. But the other deltas I'm not freaking out on yet. EEM is giving me a problem, mostly I think because of volatility. What did I do? Yeah, that one is, what is EEM? Double diagonal. So EEM, see what we got on these trading. So it looks like SLV is the one that's getting challenged. Analysis EEM. Okay. That's why. So that's the one that's getting a little challenged. EEM. Yeah, because that is a double diagonal. TLT. So we did get filled on TLT. FXI. But SLV is the one that we're 10 deltas, or 10 long deltas. So what's going on with SLV? Okay, I'm not freaking on that. I mean, we are long deltas, but I'm not going to freak. Okay. Let's see, what else do we have? And then we're going to open up. Because markets, AKW, good to see you. Because their markets should be opening up real soon. Okay, Micron. So we've got, and we'll see once their markets open up, we'll see where everything goes. So we got the XSP, that filled. EEM is the only one that I'm here we go. Markets are open. EEM is the only one that I'm really like, okay, let me turn off these alarms. Okay, Micron, how many deltas? We're 4 deltas down, so that might be just a volatility crush that's happening on Micron. XSP, okay, and we're only going to stay in XSP. We'll see what happens Friday on XSP. Yeah, the deltas on silver is definitely some long deltas, but we're taking in account that volatility. Plus we get paid $2 a day in theta, and we get paid when volatility falls. Same with this FXI, and I think FXI and SLV are December trades. Yeah, there's still 50 days on that one. FXI, there's still 50 days on that one. Micron is the only thing, that one is, again, 50 days. But the thing about Micron is we're only 4 deltas. Okay, 4 deltas on that. The XSP trade did fill, and we are, okay, so let's see what happens in the next, because it's a November 7th, November 12th trade. And the thing is that I'm looking at, this is, again, a calendar, just a regular calendar. So, we'll see what happens. We did pay, how much did we pay for this calendar? for the XSP calendar. 88. Okay, so 88 bucks, 88 cents. EEM, we paid 77, but I don't want to lose the whole 77. This, again, it's all about risk management. So I have to manage this risk real well on this. The key is risk management. So all the trades that I was looking for finally, and TLT finally got filled. Yet it's going into, I mean, it's down 7 cents, but going into our wheelhouse. Oh, let me go ahead and, it's amazing how Tasty Trade logs you out and then logs you back in. And I don't think I have a VPN on. Let's look at the trade and yeah, we got TLT. I know why. Because, okay, we should be getting some data. Let's go to our positions and see why it's not. Okay, now let's go back to trade. Come on. It's just probably one of those things where it takes a while for because TLT has options. It's just one of those things where it might take it a while to populate the screen. But we do have a TLT position on, which was that butterfly I was trying to get in. Okay, there we go. Now we can populate. Okay. This is that butterfly. And the key is to try to keep him on the mountain or have him ski right down into the middle of the trap by December. And I'm not going to totally freak out. We are, in terms of how much we're getting paid a day on TLT. Are we getting paid daily? Yes. We're getting paid like 25 cents a day for that. So I'm not going to freak. Again, it's, hey, Brother Will, always good to see you. Hold on for 1 second. Yeah, I was trying to do that. When I told you yesterday, Brother Will, in terms of what I saw, in terms of what's happening, most possibly because of an election, I wish I could give you guys the numerous amounts of newscasts that I watch and news organizations and journalists. It's so funny. Everything that I said yesterday, they all mirrored, damn near perfect, saying that they're looking at the contention of because I remember I told you guys to think about it for a minute, why the volatilities were going up after the election, even though they normally go up in contango. Contango is the the futures price trading into the future over the futures price paid in today. Whereas backwardation is when it's backward. The futures price is backwardated. In other words, it is higher today than in the future. And that's one thing that I noticed in terms of I could show you better than I can tell you, but I'm gonna have to put Thinkorswim in. And I I use that just for charting. I rarely trade. I have an account there. I have a live account there. I've had it for since they started over 20 years ago. But I don't do as much option trading as I used to. Commissions, fees, everything else is there they're too high. Plus on Tastyworks, you don't have to pay to get out. It's not the Roach Motel. You get in and you can get out a lot. It's more liquid. But we do have some positions on, and I'll add some more here soon. But everything that I said in terms of my thoughts, in terms of why they would be more than likely more prone. Yeah, Micron is definitely moving, but no, I think we're 5 deltas long, so I'm not going to freak too much on Micron, on the Micron chip. 5 deltas is 5 deltas. It's barely taking a dip. But again, that thing can move $4 a day easily, and I said $8. So that's what I'm kind of anticipating on this. Let's get a chart up. Yeah, this thing it can move, and it gapped down today because of course all markets are down. Now I normally look at markets. I was looking at the futures overnight, so it's not like I had to. But I'll go through the routine just because it's the routine of how I do it. SPX, we're down. Look at that gap down. SPX gap down 47. And again, that could be because of the news event. Because remember, I told you guys what was happening today. I told you yesterday that all those different events that are happening today. Oops, let's go. I don't mean to do that. ES, the cost of commitment, it gap down, and it's a healthy gap down into other area where there was another area of supply. Let's go to VIX slash VX. I always look at supply and demand. VIX is definitely up, and that should help our trade. But our trade isn't until next month, so and that's why you see a tiny little bit of profit today. Why you see Micron going down today, and then let's go to the cost of money, cost of bonds, and cost of bonds. Bonds are also down. Okay, so yeah, definitely there is a and a lot of that was because what I talked about yesterday, in terms of their the news events that are coming out today. Because this whole week you have a lot of stuff happening. And it's not like I don't tell folks don't take a position. I just tell them to just monitor their positions when they get in and just be careful not to take neutral positions. I mean, when things are really crazy, like I'm not saying real volatile, but when things are really crazy, in terms of the possibility of news events, you want to kind of be careful in terms of how many positions you take that are neutral, because they will go against you. So let's go to the news events and we'll take a look at those. So it's definitely a full court in terms of down day. Everybody's thinking, hey, okay, it is logical that markets should be down because of the news reports that came out. Let's do this. Okay. Let's see. Give me 1 second. Oops. Let's do this. My opera tabs are acting a little wild. Okay, here we go. So let's take a look at news reports. Because remember, you had these news reports today that came through. You had some heavy ones: GDP, core PCI, employment data, unemployment claims. All of those came in today, and that's probably because they're trying to. And we'll see. We'll take a look at this in FedWatch. GDP actually fell last month. It got revised from last month, but it's pretty much flat. Oh no, that's Canada. So my bad. Core PCE. This is where we're at. Core PCE came in as exactly what they were. It actually rose from last month. So clearly, core PCE means there's more inflation coming in, which means that interest rate, the fact that them lowering interest rates might not be on the table. That core PCE price, that's interesting. Employment cost index, again, and actually that actually went down. It should portend to, if it doesn't cost more quarter over quarter, that means it's an expansion of an economy, which means why should you raise interest rates? Change in price of businesses and government pay for civilian labor. Actual greater than forecast is good for the currency, i.e. stronger dollar, i.e. stronger interest rates. Makes sense. Okay, so it looks like, yeah, that employment cost index, the cost to hiring went up, which, and again, leading indicator of consumer inflation. Again, inflation, yes. When businesses pay more for labor, higher costs are usually passed on to the consumer. That's inflationary, and so that went up. Then you had unemployment claims. Unemployment claims, it looks like it went down. They forecasted it to how many more unemployment claims, but apparently that is also bullish for not necessarily an economy. A bullish for in theory, it's bullish for an economy. It means your economy is heating up. So if you got more unemployment claims, then that means that your economy is slowing down. What looked like the unemployment claims came down damn near by 10,000, 13,000. And it was revised from the last revision. It went up, so they went up by 1,000. Last revision. So they said, oh yeah, unemployment went down to 227. That's a big drop in unemployment claims. If you only got 1,000 revision from the last one, and now you got damn near 13 on this. I mean, 13,000 on this one. That's huge. Unemployment. The number of individuals who filed for unemployment insurance for the first time during the past week, actual less than forecast, is good for currency. Is again inflationary. Okay, it's not a deflation scenario. So this is quite interesting. Which is why you more than likely are seeing their markets fall, and we're going to look at that Fed watch. Hold on for one sec. Yeah, I hope I'm not getting my fifth round of COVID here, because I'm not going to take a Fauci. Never have and never will. But the thing is I'm looking at this going in. I'm just here with my sinuses, and I'm coughing a little bit, and a lot of that is because I haven't slept and I've been working out like crazy. I mean, I love this. I did take 3 days off. This is the first time I took more than 2 days off in 5 years of working out. I normally work out and then I take the next day off, and then work out, take the next day off, and at the very most, it's 2 days off. Or I'll take that second day off and I'll do cardio. But this is the first time I took 2 actual days off. I mean, 2 actual full days off, and not do. I did some walking, like a few miles, but not any extraneous cardio. But yesterday, my goodness, and I think I was trying. I think I almost gave myself a hernia popped in my abdomen, because in my core, because I was doing pull ups, and again, like I said, I want to do 3 plates by December. 3 45-pound plates, which is like 95 plus 45. That's 130, 140. Let's see. Wait a minute. Yeah, 95. I mean, 90 and 45 is 135. So that would be almost that's over 60% of my body weight, and that's what I'm trying to do by December. Is do pull-ups, and I want to rep it out. If I could do like 3 or 4 reps, fully repped out on 135-pound body weight push-ups, and on pull-ups, and on my push-ups, I want to do 3 plates, which is 135 on my back when I do push-ups, because I could do 90 in a heartbeat. I mean, I could rep out 90. Like 2 45-pound plate push-ups is nothing. I could do 2 45s and a 25. I can't rep out with the 25. I could probably do like 5 reps, but with the 90s, I could easily do 15 reps with 2 45 plates. But being able to do 3 is going to be difficult by December, because I've got these shoulder issues, and I mean, it's just been tearing me up with my shoulders. My deadlift, I really need to work on my deadlift. I was doing deadlifts and the cage deadlifts with the neutral grip bars, and I can do 4 plates, but I really need to work on my regular deadlifts. That's the thing, because my core, my stomach, and I don't want to get a hernia doing it, but my stomach actually felt weird when I popped it out yesterday. I was pulling these plates, and I was doing neutral grip pull-ups, and I said, let me just go ahead and do regular grip pull-ups with 2 plates. And I did that before easily, repped it out. And I did that yesterday, and my stomach went, nope. And I said, okay, that's it. So I just backed it down and just went down to like 60 pounds. And then when I did that, and then I finished that, and then I did my dips. And doing dips, I want to do 2 plates. I saw this one guy doing 4 plates. Of course, I'm not that young. When I was in my 20s, I could do that. But this is like, over 3 times that amount years later. So this is like, I haven't been in my 20s, for decades. And so I don't want to, like, because you get injured a lot faster when you get older. So So I went in, I did it. I strapped on a 60-pound kettlebell, and then I increased the weight up from there, kettlebells. So it's like 60, 80, 100. And I want to get to 3 plates probably by March at the rate I'm going, because I don't want to kill my shoulders. And I could possibly do 3 plates by March on kettlebells. And then I'm gonna start sandbag training, because I start out with 70 pounds, then I'll do 100 pounds, and then I'm gonna try to work up by next summer. I want to do at least 150 pounds, possibly 200 on a sandbag, and that's a whole different type of strength training. I mean, doing 50 pounds is hard. On just regular sandbag training, it's like doing kettlebells, but it's like lifting something that's dead weight, just pure dead weight sandbag training. But I really, really want to be able, like next summer, if I could do 150-pound sandbags, oh my gosh. I mean, this is pure strength training. I love strength training. But anyways, let's go back to their reports and go to FedWatch. So they're looking at bullishness in their economy. And one of my major reasons I work out is because it's a disciplinary scenario. The more I work out, the more disciplined I am to take my trades. I get very disciplined. And that's why I'm so glad that I work out. Because it really does make me have to stick to rules. Okay, look at this. Wow, so it actually increased. It wasn't this much. 96.2% chance by this Fed that they are going to lower it 25 basis points. It changed from yesterday. It definitely changed. Yesterday it was 95%, 95.2, so it went up 1%. That they are definitely going to be in this interest rate, which is the day after that election, 2 days, I think, after their election, that they are going to lower interest rates 0.5. I thought that they would hold. But who knows? This might not be updated, because if you got an inflationary scenario, chances are, I mean, everything points to inflation. Why would they lower rates when everything is pointing up? And it might be because markets are falling. But I don't know how updated this Fed Watch is. When did they update this? When did they update this? See, I don't know the updates on this, but this is for the November 7th meeting, and it actually went up. And they normally do that when the market really, really gets sick and starts to crash. So that's going to be interesting to see how that works. How they're going to deal with that. Because everything's screaming bullishness right now. Let's go to the Thinkorswim. Okay, if we can log in. Wait a minute. What are they saying? Okay, they're having technical difficulties logging me in. Let's try it again. Let's see if they can log me in. Because I want to go into Thinkorswim just so I could look at the contango. And I haven't worked on it on tastytrade to see where the contango is on that going into the future. And then we'll look for some trades, see if we can get some trades happening. That Micron stock is looking like, well, the deltas. I mean, it is about 6 deltas, so I'm not going to freak. FXI, that's one that I have to be very, very cautious of. It's 11 deltas, so that, and SLV is almost 15 deltas. So that's another one that I got to be real, real careful. Once it gets to 15 deltas, I start to look like, okay, this is getting serious. It's getting very, very serious. So I got to really, really like monitor what I'm doing. When it's up at 15 deltas, you really, really want to, just kind of make sure that you're watching things. It's not terrible. It's not like the end of the world. Let's see what's happening on this. This Thinkorswim ain't working. Because I wanted to go through that. Okay, let's see if we could get on Thinkorswim one more time. Let's log into that. And there was a couple things that you might have seen that said ITM. It means I have some stocks that are in the money. And the thing is, I'm not going to freak them. The reason those are because those are the ones you want to be in the money. Most selling strangles and stuff like that, you do not want to be in the money. But if you saw that yellow square earlier that said ITM, those are the ones I want to be, because those are directional trades. They're taking advantage of buying volatility, and that I want in the money. So let's see what's going on with Thinkorswim. Yep, it just does not want to. It does not want to load. Give me 1 second. Why is Thinkorswim not coming in? Okay. They're having technical difficulties loading Thinkorswim. Interesting. Okay, we're going to try one last time and see what we got going on with Thinkorswim. Let me do something else here and close some other screens because it might be a memory thing, or it might not be. So let's check that out and then try, because I really want to see the contango and the backwardation. And that's the only real good thing. Like I said, for analytics, I really like their curves that Thinkorswim has. I'm just used to them. But in terms of actual option trading or futures trading or Bitcoin trading, even Forex, Tastyworks is hands down light years ahead of Thinkorswim. I mean, in terms, especially, I mean, just the fungibility in terms of its, fastness to be able to get done what you need to get done. Well, I think Thinkorswim's taking its time. Let's take a look at we'll take a look at some opportunities. See if there's any new trades we can get into. I do like that JPM trade that Tom Preston had yesterday. Yet I'm not going to take it. He's got another good one today, and I can't remember. It was bullish on something. I cannot remember what it is. What was it? Bullish on Dollar General, DG, because Dollar General is getting destroyed. And I do like the concept. I just don't like to mirror trade, to puppet trade, folks. I like to find out why, but I don't want to do it. Look at Dollar General. It just got clobbered. But it's sitting on what you would call support. I call it orders. Basically, it's just a lot of supply down here. And if you've ever done like supply and demand trading, that's like being on the floor in the markets. Or if you've done point and figure trading, I've done it. You name it, I've done it. I've done point and figure. I did like several years. I was working on point and figure trades just to see the supply and demand. And then you do what are called point and figure counts, where you count like the columns. You count the columns and the number of things that made up those columns, and that predicts where that market could go. Not to say it will, but it actually predicts the probability of where that market's going to end up. And I mean, it's really a really cool form of predicting where supply and demand could actually happen, because that's all it is. Point and figure is like, I mean, it's pure supply and demand trading. But look at this Dollar General. It's right down to these areas of supply. And everyone who trades should know what supply is and demand is. It's at an era where supply has gotten rid of. I was trading. There was an Israeli firm, and these dudes, I mean, hardcore Zionists, and I was in their group for a long time, for years. I was in that group, and all they do is point and figure. And I'm trying to think. I think the guy's name is Aaron, and I mean, he's phenomenal technical type of guy. But I'm like, I don't care about anything except for how do I trade it. To me, it's like, that's all good. I mean, I know all kinds of technical analysis. I've been doing it for over 2 decades, at least 3 decades now. So it's not like technical analysis and all that is the do all say all. To me, it's like, how can I make money with it? How can I make the best probable outcome using statistical values of, is the juice worth the squeeze? And he would tell you exactly what's happening, but you never really got the gist of the probability analysis. It wasn't there. It just wasn't there. So, you know what? I got to get rid of all this. This is the holy grail. I cannot. My sister and I had a session. We messaged each other yesterday. We're going to do another one this Sunday, another session. Because I mean, it's pretty phenomenal. I mean, we were live watching these markets turn exactly where I had it. I mean, I was like, whoa. Again, I can't deploy things until they're perfect. But anyways, look at that Tom. If you go to if you go to Tastyworks, Tom Preston does an email every night of the markets, and what he'll do is say, "Hey, this one looks like it's in play, and you might want to do this kind of trade on it." But I like his logic, but I'm not liking the trades. I'm not going to do Dollar General. It's been ranging forever. Cool. It's got a lot of high volatility. Cool. But the thing is, a stock that goes down that much, 32%, you know, I mean, it's down to 79. I'm not saying it's going to go to zero because that earnings wiped out a lot of people. It did like what Facebook almost did to me on Thinkorswim. A lot of folks got in the money after that earnings last month, or was it last month? No, it was in August. August earnings, they got destroyed. It's going to take a while to digest it before it wants to go back up. If you and earnings, I believe, is in December. The next one they got in December. So this thing could easily drop again to the downside. If not to say that it will, but it may stay where it's at until their next earnings. But I do like the fact that this is something that's cool. It's very cool. And again, if you're into Tasty Works, like I said, I don't puppet trade. I don't really like to puppet trade, but if you follow Tom Preston, I think he's on Tasty Trade in terms of, he is on Tasty Trade in terms of, if you want to follow their trades or make the same trades they do, I caution everybody about doing that. Because a lot of folks just want the real quick money. Oh yeah, I'm gonna follow him. He must be doing good. You never know. It might be a seriously professional trader who's been all their lives and whatnot, and you see how many losses they take. They got those $2 million and $3 million a day accounts that they can take that kind of a trade. Folks that think that, oh yeah, I'm gonna do it, and all of a sudden it's like, how come it didn't work out for me? Puppet trading is something I tell folks, be very careful. Be very, very careful. But anyways, if we're gonna look at the contango or the backwardation of some of these charts, let's take a look. These are bonds. This is bonds going into the future. Like I said, this is the only reason I really use Thinkorswim is because I like to see, their possibilities of contango. Let me get to Thinkorswim here because I'm still in Tastyworks and Dollar General. I just want to see the curves into the future in terms of what is possible. Not it doesn't have to be, but what is possible. This is bonds. Look at that bond curve. They're saying money will get cheap until after that election, and then they're going to go right back to an inflationary environment. Interesting how that works. They're looking at going, and basically this is kind of flat because it's only, it's not like going from 117, 118, 119, 20. They're saying from now till March, just till I guess that next after they get the retail quarter for what's going to happen, because you don't get what happens in the retail and everything from Christmas season, how well that economy worked until March. So, and then they're talking about running it right back into inflation. So no matter who's president, they're going to be faced with inflation. Let's go to E-mini S&P and see what they got. So they're looking at, even after an election, a bullishness in the markets. Wow. Futures traders are saying, hey, this thing's going to get bullish. They don't care. They're really running it up into the whole year. This is basically the whole year. They're saying, hey, it's going to get bullish. And that's the E-mini ES. Let's go to VIX and see what the VIX is saying. VIX futures. Now, this is weird. VIX futures, yes, they're saying it's going to come down right after that election. Of course, volatility come out, but yet remember the E-mini volatility was going up. So you've got a major divergence. If you've got futures saying that the volatility is going to come out of that election, but then afterward, fear goes back up. You've got fear going up, and you got the cost of money going up into next year. So that bullishness on the E-mini ESP is something I have to take with a grain of salt. When you saw that, in the present curve of contango, because VIX futures were in backwardation. It's a lot higher. An election's telling you that. It's going to be higher now than it is going out into the future. Why? Because there's more fear now. And the price of fear is higher now than it is going out into an election. So that does make sense that would be the case. Okay, that does make sense. But if I go into the curve, and I'm looking into the next couple of weeks curve, and not all the way out into like 2025, if I'm going into the E-mini ES, and this is the active curve is right here, and especially Brother Will, I know you do NASDAQ. E-mini ES is just a big brother of NASDAQ. They do the same thing. They barely go against each other. So I look at the E-mini because it's more important. If you're going into the future, Yeah, there's a lot of it's a lot of contango. Just look at that contango. In other words, these contracts going into December 25, they're going up. Look at the ask price, even though the size is minimal, because you look at the active, but at least they're saying, hey, somebody's out there looking at, hey, this thing can go up. You look at the size, you look at the volume, you're not going to see anything after what is it, June? Damn near nothing after June. But even going into June, you're going from 57.84 to 58.99 going into June. So that's a very interesting situation. The contango is definitely there. Let's go to VIX, the opposite of E-mini ES. Let's go to VIX, and we have, look at the ask price, 30.30. It goes down into June. It does go down into June. Yet that curve, let's look back at that curve again. And that curve, yep, okay, going March, April, May, but the curve is telling you that it's going down into June, but it's still that curve going back up means even though it comes out in November, it's still and that could be going down just because of the fact that you got an election season, but they're still thinking that volatility is going to start creeping up again. Again, that could be inflationary. Let's go to we went to there. Let's go to the cost of money. Bonds. Cost of money. We're looking at 117.10, 117.17. So going into June, the cost of money going up to 118. So we're up a full point at a 118. Even though there's no volume or size there yet, I'm just looking at what the bid-ask prices are. What the theoretical, I guess you could call it, are saying, hey, we think we think that inflation is going to be just as bad, if not, if anything, kind of just as much as it was, the previous year. So that's something to take a look at. Just something that's, and again, I use Thinkorswim for that, just because I could see the curves, the futures curves going out into what may happen into the future. Outside of that, that's literally all I use Thinkorswim for. I may use it to look at expiration prices at calendarized spreads, but other than that, in terms of trading, nah. But man, look at that Dollar General. And I mean, this is a trade that I might be looking at, just because. Now, he showed me what stocks were in play. That's all I care about. Trading it like he did, that's not something I would do. But I do like the fact that it's in play. That if there's something in play, I can use it, and I can use it really, really well. So, what are we looking at for Dollar General? Let's take a look at the volatility. Okay. The 5-day volatility, it went up 8%. Wow. That's incredible. I love that. IV rank 64. Oh, that's beautiful. IV index, is it 54? This is tradable. Let's look at their, again, the king being volume. If we were only going to go into December, okay, this thing, they're expecting $12 move. I always pad it up a little bit, but they're expecting a $12 move into December. Where's our deltas? Oh man, we can't even get, let's see, 18 delta. That's as low as we could go. Where are the other deltas? How many strikes do I got up? I should have all the strikes. Yeah. Let's see. Strikes. Because I thought, I know how many, how do I knew I did this before. Yeah, all strikes. So I got all the strikes. Damn. Okay, all the strikes. There we go. Deltas too. Okay, I was gonna say, wait. So some more deltas came in. I was like, what the hell? So let's look at our fence. 16 deltas. It looks like a slight skew to the upside. No, it's good. It's okay skew to the upside. 289 out of 789. It's close to a third. That's nice. I'm not mad. Your CVAR, worst case scenario, if Dollar General goes totally against you and life is hell, you're about $1,700 down. On the worst case of 5% of the time it happens, where it'll blow you out of the market, And like I said, that's like 5%. So but your buying power is 70. So you would get margin before that happens in the 784. The thing is with that is you're going to be paying overnight margin, for because it always fluctuates with naked stuff, with naked strikes. So it's a $76 stock. You were getting paid $8, so almost a little over 10% a day on theta. Probability of profit is 73%. Delta is um, damn near neutral. Let me see. Let's get rid of that CVAR and see where we're at in terms of gamma. Let's take that CVAR down here. We're going to put it instead up above. Let me see. Do I want it above Vega? Yeah, okay. Gamma delta, CVAR Vega. Okay, cool. CVAR Vega. So yeah, our gamma. Okay, $2 in gamma. So because remember, every time it increases against you going around that fence, it's like momentum. The fence that it gets more and more, and the person can fall off that hill. So let's take a look at the hill. Yes, again, more skew to the upside. If this thing went to the upside tomorrow, you'd be down. If it went directly to the upside, you'd be down like $500, which is, I mean, that's damn near most of your buying power. If it went down to the downside, you'd be down about $300, which is half your buying power. If it just completely, if it just collapsed or goes the other way, I've seen things do that. Don't ask me. You just saw the chart. Dollar General, which was trading at $124, dropped 32% down to $84, like that. Bam. And this thing can move, I'll say $5 a day. In the last 20, the average movement that this thing has had in 21 days is around $5 a day, and that's what I'm looking at on this particular stock. That's why I always look at that kind of thing. Because I always pad it, I always double it. But I do like this because I love the volatility. The thing is what kind of a trade? Would I trade a strangle with that kind of skew to the upside? No, because it would destroy you in terms of buying power. Even though if you moved your strikes, like if this thing went up and it goes against you, 15 deltas, you would move your strike. But how much credit would you get if this thing went? Say it goes up. Say it goes up. If we're looking at our deltas, it goes up. Say 20 deltas, which would be it'd be long. Say you were long 20 deltas. That's even worse. Say you were long about 16 deltas. If this thing went up and you were long 16 theoretically, if it went there, long 16 deltas, that would be at around the 90 strike. If this thing moved up to $90, let's take a look at that. If Dollar General, you're getting like $3 a credit, just being where the market's at right now, you're getting $3 a credit. But what would happen if instead of it at 79, it was at $82 and it moved to $82? 82. Okay, theoretically, how bad would it be? Okay, so you'd be down and say if this thing moved 80, if it moved up, say instead of okay, we'll say tomorrow it moved up to $82. Okay, it makes sense. You would be up. You'd be up. Let's go to $90 because that's even scarier. Okay, I said $3 up. Now let's go. Let's see if it moves up to $90 because that was your 16 deltas. If it goes to $90, now you're down $162. If it went and moved and you were in 15 deltas tomorrow, you would have to move your 65 put. So if we moved our 65 put up, we'd move it up here. Okay, the credit would be about a $200 credit, and it would increase your buying power by like $400. So my thing is like, would I want to do that? and then I have to hold it with that overnight margin. Would I want to be in that kind of a predicament? Even if volatility goes down, which it will, which means that you would probably make maybe another $50 in credit. Do I really want that kind of a problem? No, I don't want that kind of a problem. Those are problems, that I do not want to deal with. Okay. That's not doing what I want it to do. Deal spot price. 78.92, reset. Okay, so I reset this. Contract IVs. Okay. So I reset it. I wonder why this deal spot price, why that doesn't do that. But anyways, do I really want to have that kind of a problem? No. Because remember, this is about making sure that this guy stays on the hill. This green arrow stays on the top of the hill. If you're selling volatility, you want him to be underneath the hill. I mean, if you're buying volatility, he's under the hill. If you're selling volatility, he's over the hill. Here's a good case in point. Let's go to XSP. See, we're right here. And, and actually, look at that. I mean, this is where we're at. So it actually went further down. It's a 574, and I have a 577. I don't want to adjust this to put him under the hill. I'm going to wait at least Friday, Monday at the latest. If it continues to go down, I'm good. I'm out. But my thing is I want, because this is a November 7th trade, I believe. What is this? What are my strikes? I think my strikes are, because I'm not deep in the money, but I don't mind being in the money on this, because again, when you see these in the money, that means you're making profit. And I'm up a little bit, like 10% today, because I did it for 88 cents, and I'm already up, or I was up 10%. Now it's 5% now and falling. It's 5% and falling. Let's see why. Let's see, because where the SPX is at. It might be because it's down quite a bit. SPX, yeah, it's down. The SPX is down 72. So yes, I don't mind being in the money, but the key to this, and again, I'm gonna wait because this could just be early morning trades. That's all we're looking at is early morning. We're gonna let the market settle and do it at once. But this is a November 7th trade, so I have to be out Monday at the latest, at the very, very latest. EEM is the other one that I'm involved in, which is Micron. Okay, Micron's still 5 deltas, so I'm not going to freak on that. FXI is 11 deltas. SLV, I got to take a look at. It's something I'm not going to freak, but it definitely is something I'm going to take a look at. SLV, nah, I'm not freaked. I mean, it's still on the hill, but it's getting down a little bit off the hill, so I'm not going to freak too much. Micron, I'm not going to freak. Let's take a look at Micron. Micron, yeah, it's just a little bit down off the hill. Yet, when this thing falls off the hill, the more and more it goes down, of course, there's a bigger drop because it's a higher price stock. So, we'll just see what goes on with that. Micron, who else are we looking at? We got SLV, FXI, VIX, I don't care about. We're just going to sit on that. Micron, we're not going to freak out. Again, early morning trading. We'll see what happens later. TLT, we just put that on yesterday. EEM is the other one I want to show you in terms of, see right here, you want this guy to be, this will be inside of the hill when we're talking about volatility. You want him to be underneath this hill. And the more and more what happens is when volatility gets out of the front month and it holds onto the back month, that green arrow is more like inside the hill, not just, on top of it. You don't want him on top of the hill. You want him inside of it. That means you're making profit. That means that you'll be doing good. So that's the difference between buying and selling the volatility. So I'm going to sit and wait. Markets are still digesting the early morning trades. So we'll see what happens. We'll see, let them do their thing. But other than that, it was something I was going to try to but I can't remember. So anyways, we got those trades on. Again, I'm buying volatility on some of them. I'm selling volatilities on the other because I want to be Vega neutral. What Vega neutral? Vega's volatility. I want to make sure that I have equal amounts of volatility being sold and bought. That's the key. That's the ultimate key. Oh, we got somebody else here. Don't know who it is, but there's somebody else is on the live stream. Anyways, let me see what else are we selling. Again, volume is king. Oh yeah, the Dollar General trade. That's where we were at. So let's take a look at DG. Tom Preston, I gotta hand it to you. Although a trade like this, if you want to sell calls, you are very, very scary because you saw how much it dropped. Dollar General can go up just as much as it dropped. Okay, so if I were to do this, I would sell. I would do what they call a Jade Lizard, which means you have no risk to the upside. That is the key. Do a trade where there's no risk to the upside because stocks like this are more than likely going to give you risk to the upside. So if I did this, I'd be getting, okay, now here's the key. Your buying power effect. Okay, let's take this off for a minute and I'll show you. Okay. We were at 792 buying power. We put this on. Now we have a big buying power effect. But the thing is and your CVAR should be, it's saying 6280 is your CVAR, but let's put that CVAR back. No, we'll get it back in a minute because I'm going to show you something. You're getting a lot less credit, but you're protected to the upside. It kind of reminds me of an iron condor. If I were to do this, I would bring this up to the 25 deltas. Let's take a look at the mountain. 25 deltas, to risk that kind of amount, to risk that kind of and yes, we are all December 20. So let's go ahead and back this up. We want to take as much risk off to the upside as we can. So let's see what we can do. Okay. We would actually have to move these. So we got 105. Let's go to the 120, 115. Nope, it's not enough risk off to the upside. Let's go to the 1. So we're at the 125, 120 call. And no, not enough risk off the upside because we want on the profit expectation on the expiration graph, you want it to be 100% credit. This is all for credit. And the only way you're going to do that is by bringing these strikes up. Let's see, and that's too much of a delta yet. It's 34. That's the only way you're going to see this, at least in the December expiration. You'd have to bring this in the money, and that's not recommended. It is not recommended. I can't see any other way of doing this to get you that credit. 100 call, let's see, 95 call, 90, 95. Still not going to give you the credit. So Jade Lizard, I couldn't see. You're naked on one, but you have defined risk on the other, and I can't see doing that. So let's see. Again, I don't like that upside risk. I could do just half the iron condor, which is just a put spread. So that way, all it has to do is either stay where it's at, go up, or not fall too much. So if I went down to the 16 delta, and I did the put, I'm not getting enough for the 650 debit. I would like to get more credit for that. But if I went ahead and so 73 of 427, that's not a third of the width of the strikes. 114 of 703, that's not a third of the width of the strikes. And that's at a 16 delta. If we go to 25 deltas, then we're going at 119 of 381. That's a little better. So if we did a 70-60, our buying power is 794. We're not getting enough. 192 of 7, we're not getting a third. We would have to go $5 wide strikes if we did this because we're close to the probability of making 50% is 82% probability. We're getting $1 a day. Probability of profit should this, on the very next, if all things being equal, you have 70% chance of making a penny or more. You're getting $8. So that's 10. You're getting 1%. I said 10 before. I think I was messing. No, I was talking about. Yeah, I think I had it wrong last time. You're getting 1% a day of the. No, you're getting more than that. You're getting almost 3% a day on 3% a day on buying power in terms of your. I mean, that's your delta. It can move 3% a day. You're getting one. You're getting 0.3% on your theta of your buying power. You're getting, but it can move 3%. So you're long. Okay, you're long. So it's like, that's the movement of your, that thing can move. Gamma's not really killing you as much on the downside, again, because it was upside skew, but still yet, it's just one of those trades where it's like, it's not bad. I mean, you're literally on the precipice of this thing that moves $4 easy. And then, no, I said $5 a day could easily move against you in 2 days, and you're looking at trying to, do something with it. This thing, I mean, in 2 days, one day you might be looking at doing an iron condor because of the fact that it has gone against you. So it's like, I'm not getting enough credit for this, even though it's a good, you could do it with the put spread. I mean, with the put only, but would you want to tie up that kind of money? Making, tying up a dollar and change and paying $7 when this thing can move against you. Look at that curve. Even though we don't have upside skew, this thing can move. Say it goes down $5 from like 78 to 73. You would already be down about about 8%. No more than that. It would be a little over 10% of your buying power. You'd be down. Should this thing move in one day, 10%, you'd be down 10%, and you would be down 1/3 of your credit. Of the credit. That's how much. So you would be at a loss. You would have to do something in case. And again, when you saw this chart, I mean, this thing can explode just as fast as it went down. You could see it go up. And if it went through your call strikes, you'd have to manage it like a strangle. You would have to do some things. It would be very scary. But I like looking at stuff like that to see what could happen. What are the probabilities? So anyways, let's see for some opportunities. Dollar General, I do like his theory. I just don't like the trade. KRE is still up there in volatility. So I'm glad I didn't take that trade because it's still volatile, and that's after a few days. Delta Airlines, okay, it went down 2% volatility. I can't do that. Not with 2% drop. I already got metals on. Retail dropped in volatility. EEM, unfortunately, the trade I'm in. No, I want this to go up in volatility. It's a profit. XLU, if I were to sell it, I think I tried XLU. All of that is looking good, but I tried it several times. I even think I had a condor on that a while back. If I were to trade it for December, again, I would not take this anywhere before December. I like longer dates, more premium, and a lot more time to be right. Let's go 21 deltas on each side. 2021 deltas 132. You're only getting you're getting about 10% of your buying power, so it's not really. You do have a greater chance, but again, okay, yeah, there is a tiny bit, very little volume. There's not much to really shake a stick at. Let's see if we went. Yeah, there's no volume here. I was going to try to do a condor, but there's no volume for condors. Yeah, you're not even getting a third with the strike, so XOU's off the table. Again, volume is king. EWZ, it went up and okay, this is still 65, 34, 8.3. It went up 8. Is that 8 points? Wow. It went 8% in the last few days. It went up in volatility. What is going with Brazil? This is Brazil. And it's not like it moved too much, but look at that spike. These green and red lines are your top and lower end of IV rank. And it went up. This thing has the ability to move $1 a day. You're down. This is only 13 cents. I like stuff like that. Let's see what the strangle looks like. I like this as a strangle more than I like it as a condor. Let's go to the 17 delta. Remember, 16 delta is your wheelhouse. Okay, 17, 13, 47 of 284. It's not giving me enough credit. Let's move. Let's see if it went down that much. Let's see where the skew is. If I went to 20, well, there's too many contracts here. I have to keep it at 13 deltas. I'll back this to 11 deltas. And let's see what the skew is. So, uh, looks like a little more skew to the downside. 90, 88. No, it's about the same. So we're good. Good skew. Delta neutral, but the gamma means the acceleration of how fast he can fall off the mountain. Gamma is big. That's all gamma is. That L shape, that or that upside down L means how fast can he fall off the hill. Remember, you want to keep him on the hill. When you're selling volatility, always be on the hill. Wow, we got more folks over here. Interesting. Yeah, interesting. Anyways, you got a 94% chance of making 50%, which means you'll make $15. And you've got a theta of you're getting paid $1 a day. Will I want to take a chance of spending $280 to make $34? Hell no. There's no way. So I would have to move the strikes in. Yeah, there's no way I would do that. That's probably where you're getting your gamma. Again, that's the hill that he's sitting on. Always look at the hill, because the hill is going to tell you whether you can take the trade or not. Because the gamma could tear you up. I mean, even though it's very low delta, the gamma, if this thing moves $1, it could literally drive you off the hill. Now let's see. This right here, if it, again, our mountain or the skew, you're taking the difference between the expiration profit and where it is at theoretically. That tells you how, if you're over here, right where it's at right now, and that's about, zero where it's at. If this thing spiked up tomorrow, $3 either, or see 28. If it spiked up $3 either way, and it could happen. I'm not saying it will. It could happen, which is a 10%. I mean, it could go 10%. Anything can happen. You're looking at a scenario where you'd be down, basically all your credit that you got, you'd be down about 25% of your buying power overnight. More than that, you'd be down 30, almost 30% of your buying power. 6 times, no, like 20, a little bit, like 27% of your buying power. You'd be down, to say if that happened, which means you would have to do some adjustments. And again, how would you adjust? If this goes up, say your deltas, that would be theoretically you'd be long. Say it went theoretically 5 deltas up, you would have to move your strikes 5 deltas up again, because this is what we have here is we moved our strikes in to try to capture more credit. So you would have to move your deltas up. I mean, your strikes up as this thing moves against you. You would be moving that up, and is the credit worth it? You get an extra 31 cents, but if you moved it up, like for instance, you're at 28. Say it goes $2 up, which is very scary, because you've got $3 to your upside, till all of a sudden you get scared. If this thing went up to $30, it goes up to $30. Theoretical spot price. Man, this is sluggish. It's not letting me get. Okay, there we go. There we go. If it goes up to $30, you're theoretical. You're down 33 bucks in this. Okay, but that's in order to keep again, and that way you're getting more into straddle territory. That if you went up there, that's only being 5 deltas. So if you had to move this 5 deltas, which basically you're going from, let's see here. If you had to move that, I mean, you'd increase your buying power by $100, but you would only be getting $50 more credit to do that. That's if you did that. So I mean, it's a good trade, but I mean, it's good because it fits some things, but you're not getting paid enough credit to do that. I want credit. My thing is, how much credit can I get? Alcoa is still up there, and it's moving. I had a good trade earlier this year in Alcoa. I don't normally, when I do metals, I usually try to stick to one precious and one like copper or something. And Alcoa is aluminum, but again, we're dealing with a stock. What happened to Alcoa after earning? Alcoa has been on a tear. It has been on a tear. It's starting to pull back. It could easily get down to the supply area where there's a lot of supply at 37. So it could get to 37. It has the ability to move about $3. Easily can move $3 a day. Not saying it will, but it could easily do that. So if I know this thing can move $3, the expected on this is between now and December 20th is $4.32. So if I did a strangle, again, there's no volume. It instantly cancels this out for December. Again, I always look at the volume. Volume is king. Volume is 100% king. There's nothing out here for me to trade. I mean, what, 3 contracts? There's no way. You got a 50 to 65. It's 15 cent wide on a 15 cent wide on a $30 stock. Hell no. When you've got Apple that has 5 cents wide, and what is Apple trading at right now? 5 cents wide on a $228 stock. I mean, if we go to December, Apple $8.95. So that's $10. That's a $10, 10 cents spread on a $2 stock, as opposed to a 15 cent spread on a $28 stock. Nah, not. But anyways, but I do like. I mean, I do like the metric sets up for. But there was no volume on those. XRT, that was the other one, but that's down 3%. Again, I like high IV rank, high IV index, high volume. This is king. This is queen. The IVR, IVX, and IV 5-day is queen, and then you take the individual expiration volatilities. Then Prince is your expected move, and then the princess is the whole thing, looking at the whole family. And if all those are cool, then I can take a trade. If they're not cool, I can't. Like, for instance, gold looks like it's all except for the fact that the queen went down, and you don't want to see it go down like 1%. If it's 0.5% or something like that, that's cool. But when you're talking like 1% or like Boyle down 19%, there's no way in hell I take that trade. GDXJ is excellent. You got the king, a million contracts and option contracts. Queen, high IVR, high IV index, high 5-day change. That's queen and GDXJ. We go to the trade, look at the individual expirations. Again, queen, 61. Let's go into December. You're still trading around the 43. So they're talking about a pullback in volatility because volatility is going down. Why is that? Again, it's called most likely elections. So if we went to the December 20 strikes, expected move, they're expecting a $5 move. We go to the deltas. We'll go to 18 deltas. Again, the fence around our trade, it's a fence because that's all it matters, fence, deltas. They're skewed to the upside because you have more room here than you have down here. We'll take that. We're looking at the prints now, the expected move. That gives you your deltas. Look at that. You got more room here than you got here. They're skewed to the upside. If this thing jetted up tomorrow, you would be losing $251 if it hit your short strike. Remember, this thing can move $5. They're expecting it to move $5 between now and then in December. If it went down to the other side, you'd be less than half of what you lose on the upside. It's got massive upside skew. Now let's take a look at the princess. The whole overall, this is GDXJ. It's been falling and falling and falling. So there's more risk to the upside. Even though it's been falling, you do have risk. Looking at the princess, this thing can move, let's say $3 a day between now and then. It's already moving. It's the ATR. This could easily move $3. Again, I always double the ATR and say this. Again, it's like looking at your CVAR. Worst case scenario, if this thing moved $3 in a day. So if that's the case, how would I trade this? If I know that it could do this, you're getting 154 out of. So you're only getting 10% of this. If I were getting closer to, if I got even 20%, I would look at this trade. But I'm only getting 10% of this, of my buying power. I got to be very careful. Even though you have a 92% chance of making 50%, which means you'll make about $70, and you have a 72% chance of making at least 50%, I would love to be able, if I could get at the very minimal 15% of this, that would be a trade to look at. Because of the volatility of this thing, because you're not getting paid enough for the volatility is high, but you're not getting the credit for the volatility because it's high. You looked at the king, you looked at the queen, you looked at the prince, expected move, and then you looked at the princess. This thing is definitely can move, but you're not getting paid enough credit for the move, and that's why I'm really, really kind of like, So what would I do if I were to do this in a neutral strategy? Of course, our friend the condor. So if we went 45.40 on the downside and 60.65 on the upside, we're getting 116 to 385. Now we're talking. You're getting almost a third the width of the strikes. You still have the ability to have 87% chance of getting 50%, 70% probability of profit. Your delta is basically neutral. You do have gamma risk again that it can move on you, but it's about how much are you getting paid for the move. Let's look at the curve. Let's look at the prints. Again, upside skew. If it went up there tomorrow to destroy you, you'd be down $75 as opposed to $200. If it went to the downside, you'd be down 61 instead of. So it halved all of what you would lose just doing a strangle. You're not getting the full width of a third of the strikes, but it's close. It's close enough for jazz. If this thing went back again, we're looking at the princes and the prints together now. The overall. If this thing at a 2 weeks, you start out making $1. If as time goes back, we go December 13, December 6. Let's go to November 29th. Come on, why are we not getting it? I know why. Okay. Okay, yeah, we know why. Because the strikes. The strikes aren't there. I like to go back in time to see what would happen back in time. Because this thing moved the strikes back on us. So let's go back to, because I want to see back in time if this thing went back in time. So let's go to 60.65. It just moved everything intensely. 60.65, and that's why. I don't know why Tasty does that on me all the time. Then we went 45.40. 45.40. Okay, so we're getting $1.06. If we went back, let's see if there are options there. I want to see what would happen if we went 2 weeks back. What that means is if you let 2 weeks of time pass by, yeah, there's no strikes there, so you're not going to get the pricing. You're not going to get. Sometimes you could get the pricing, but there's nothing being traded there, nothing there. But theoretically, if again, look at the bid-ask spreads. There's no volume there. But again, I want to see what would happen if 2 weeks went by and a theoretical price. When you don't have volume, you don't get the right price anyways. But what would happen if 2 weeks goes by? How much? We'll look at the analyze tab. Okay. I like to look at the strikes to do it, but let's look at the analyze. Let's say, for instance, we put this trade on, and we'll go in 2 weeks. Today's Halloween. I didn't know that. So let's go into, say, November. Let's go. Yeah, so today is Halloween. All right. Let's say November 15th. What's our theoretical? November 15th, all things being equal. Per contract IVs. If we went all things being equal, the best way I could tell is if I do this. Let's go to today, make sure that I can do this right. Okay. There we go. Okay, so per contract IVs, all things being equal, we're getting paid $1.83 per day. Everything stays the same. What would it look like in November? In November, let's go to November 15th. So we'd be up $11 in 2 weeks, all things being equal. That's what our theta. With just theta, Now, if volatility goes out of it, because it's a short volatility play. You're going, the more and more that volatility goes down, the more that you do, the better you do. If we did this and we went down, say 1% volatility on all of them, then okay, we'd be up 16%. So this makes sense. Say 5% volatility. Now that's a big stretch in terms of volatility going down, But say something happened with emerging markets. It's post-election, Trump gets in office. Who knows? Maybe he sings "Kumbaya" with Xi Jinping. Okay, you'd be up $32, and that's in 2 weeks. So you would have to hold this trade a little bit in order, and that's a third of your credit. You won't make that. You'd have to stay in for about 20 days, 21, 22 days. Let's even go further. That's 2 weeks. 1, 2, 3, 4, 5. Yeah, so you'd have to stay in about 21 days to get about half your money. And you'd have to have that volatility crush, which normally happens. That's all things being equal and everything stayed the same. Nothing moves. Price didn't move too much against you or anything else. The thing about that is, remember, these things are kind of hard to manage because of the fact you got protection. So you're going to have to manage it. But when you have protection, it's like you have that fence up to stop from going, completely crazy, from losing all your sheep. It's just a lot harder to manage because it's an electrified fence. So it could kill some of your sheep. Think of it this way. The red are your fence. The green are electrifying your fence. Without the red, you just have a fence that you can, you're keeping your sheep on the top of the mountain. You don't want wolves or anything to get them. So you don't want them to get around these red stripes, which is the corner of that, of this straight, of this squarish type of line. You want to keep them on top of that hill. The thing is, wolves could easily, I mean, if look at how far, if this thing went down at the same level that went down where the fence is at, you would really be suffering because of the fact that you don't have the electricity to keep the wolves out. But it could actually trying to, as this thing moves, you're going to have to move this to keep that hill, but it gives a lot more risk between the fence and the electric. So those wolves might be able to get, even though it's a lot more, it's a lot further for the wolves to travel to the regular fence. They have to get through that electrical fence. But the thing is it makes it more risk for the sheep to get, it's a lot further from home. Think of this as a sheepdog. He has to travel a lot further to get, so say that fence doesn't work and the sheep get out here and it's closer. Now that sheepdog has to travel even further and further and further because that's your electrified fence. That's your last line of hope before, I mean, that's when the market tells you, hey, if it gets down there, you're literally, in that you're beyond your long strikes, the real protection. Your condom has a hole in it if it goes through there. So that's the thing that I really, really, in terms of doing iron condors, I really like adjusting iron condors are really, really difficult. They're really, really difficult because you're faced with that scenario. Let's see where SPX is at right now, because I know we're taking a hit on some things. SPX is down 78. Bam. So it's kind of telling you what's going on. You have a scenario where, so I mean, in terms of trades, I'm not seeing any I could take right this minute. I'm just saying, I mean, I'm looking at high options volume. That's the first thing. Again, king is the volume is king. Always look for high options volume. You want liquidity. Let's look at United Airlines. United Airlines 1.83 million, 59, 41. It went up 0.8%. I like this. Let's look at that. United Airlines. Oh, I'm at coin. I'm sorry. Where was UAL? There it is. I don't want coin because Bitcoin again. Now coin. I don't like to do strangles in that because again, it's one of those stocks where or the ETFs that could really hurt you. Let's see what happened with American Air or with UAL, United Airlines. It's been again. Remember, I told you guys the excellent trade between UAL and Boeing, or American Airlines and Boeing. Excellent trade. American Airlines is to get the notionals. You'd have to go like eight American Airlines to one Boeing in opposite directions, just because of the notional. But that's a great trade in terms of a spread trade. You can't ask for it, but it's a longer term spread trade. You got to be careful of that, of the actual timing of it, because it's definitely a trade. Hold on for 1 sec. So, anyways, just looking at looking at where some of the stuff is at, I'm not seeing anything I can just sell volatility. I could possibly buy some volatility, but when you got volatility going up, I never buy things that get expensive. Like right now, volatility is going up. If I did United Airlines, again, it's going down. Okay, and it's I don't mind it going down. I mean, $1.20, I have no problem with that. I mean, remember, this thing has a probability. I always double the ATR of moving around maybe $5. Okay, and it's only down 117, but this thing can move $5 in a CVAR type of situation. I always double it, saying it how bad could it get? Knowing that this thing can move $5, how would I trade it? Again, let's look at the strangle. Everything I start off with is the sheep and the fence. I go to the one that's over 45 days, 50 days, go to the delta, 16 delta, and let's see where we're at. 16 deltas, 15 deltas, and let's look at the strangle. We have, looks like equal skew. Looks like kind of equal skew. 210 of 712. See, that's what I mean. You're getting more credit. It's not a third. You're about 25% of your credit, which is not terrible. It's not great. You got 84%, 87% chance of making 50%. So you'll make $1.10. An 80% chance of doing that, which is $110. 73% chance of making at least a penny. Delta neutral. Gamma's not terrible. Gamma is kind of it's about 5% of the stock price. Gamma it's very, very scary, but it's not a deal killer. It's 5% of the stock price. It's what would that be? Was it 0.5% or 2%? 2.5%? No, it's 0.5% of your buying power. Thank you. So anyways, looking at that, it's not terrible. It's not great. I would like to get more credit, but hey, it is what it is. Beggars can't be choosers. Again, the more credit, the merrier. Look at the gamma's not terrible, but let's look at that skew. Again, more skew to the upside. If it shot up there tomorrow, you'd be down about $448. If it shot to the downside, you'd be less than that, $255. So there's definitely more risk that they think this thing should shoot up. Why? What did we see in United Airlines? Look at that. All it knows is one direction all year, up for over a year. It's just been going up. I think that should be. I think I have my. No, this for the last 3 months. Excuse me, not the year. Since August, this thing only knows one direction since August, and that's up. Let's go for a year just to see what it looks like. Look at that. Okay, but since August, since July, August, it's only going. Look at that parabolic move. So of course, this thing can pull back and fall on you in a heartbeat. Implied volatility is not, or IV rank is cool, but this thing could easily move. Like I said, $5 on you easily. Knowing that that's the case, let's look at our fence. I'm not going to put protection on this. I could put protection on it, but we'll see. I mean, again, that'll cut down our buying power. But again, the wolf and the sheep, you got to be very careful. The key is where that red triangle is. Because we're selling volatility, you want him on the hill. If you're buying volatility, you want him inside the hill, like being shielded from all the elements because it's an apocalypse. There's zombies outside. Think of it this way. If you're selling volatility, the red triangle has to be on top of the hill because there's zombies in the valley. If you're buying volatility, the red triangle would be inside the hill because you're in a cave or you're in a hut or something like in those zombie movies, so zombies can't get into you. That's the difference between buying and selling volatility. Is where do you reside, either on top of the hill or inside the hill when you're selling or buying volatility? It's that simple. So anyways, looking at this, a lot of skew to the upside, little skew to the downside. I do like this trade because you are getting a little bit more money. I might make the market come to me. I would rather it come to me than me trying to chase it. The thing is you could easily move these strikes in case something goes haywire. Okay. So if we went down, let's go back to that. Again, king, queen. Okay, the king, I got that. Let's go here. We do have, there's not enough contracts to the downside. We'd have to go to 21 deltas. So let's see what would happen. There's a lot of contracts enough for us to do this. Okay, you're getting a lot more credit, but again, your fences are closer to you, which means that there's an easier chance for you to fall off the hill, your sheeps to fall off the hill and get eaten by zombies. You still have a 65% chance of making at least a penny. You still have up to a 78%, 77% chance of making 50%, which means you will make. It's looking. I mean, that's much better in terms of credit than what it was before. That's $3 of credit on 7. That's damn near 50%. Whereas over here, but you're paying for it because you're putting the fence, to not get eaten by zombies is a lot closer. Okay, so you're definitely paying for putting this up there. Now, say if we want to put an electrified fence in these zombies, so we're at 70. Say we wanted to put a fence. We're at $75 away is our fence, and we're up at 90, 95 is our fence up here. So we're at 50%, almost 50% right there. We have a 74% chance of making 50%. Probability of profit went down, of course, because we got too much protection. We're making $2 a day in theta, which is cool. Like before we put our fence in there, to keep the zombies out. Let's go ahead and see what we were getting $7 a day in theta. Delta neutral, gamma, because of the fact that you don't have your it's it is a little steeper hills that fall off and get eaten by zombies, but you're getting paid for it. The credit, you're getting paid for that. But let's see if we put an electrified fence, which is protection up, and see what we're going to be making should this thing go with or against us. So of course it's going to cut everything down. Your theta gets cut down less than half. You get about half of that, but it's still 50% of the credit, which I don't mind. In other words, you can move these strikes even further out. This is a trade. Again, we'll see how much you would make should time elapse, all things being equal. Let's look at our fence and our zombies. Remember, you want to stay on top of the hill because it's a zombie apocalypse. So the thing is always stand on top of the hill. Of course, you got a lot of skew. If it went to the upside, you'd only be down, say, around $70, 60 some bucks on the upside, 50 some bucks on the downside, should it just collapse tomorrow. And this is putting a $5 fence, electrified fence, to keep you away from the wolves and the zombies that are outside of here. The red fence is your regular fence, but when you add electrification, that's putting the green ones up. So that way, you're ultra protected, but you're going to pay for that protection. Is the juice worth the squeeze? And it seems so. You're not getting enough probability of profit. So this is a trade that you would take off. Now remember, this thing can move $5 on you. So if it went from 78 to 73, you'd be down about $16, and then you would be down, damn near, another 20 some bucks should you keep falling off the hill. If it went up from where it's at now, 78 to 83, you'd be down, about $10. But then if it went up another 5, you'd be down about $50. So that means that's how steep that hill dropped just in 2 days of falling $5. Even though this thing only moved like $1, again, this is an airline, so anything can happen. It's a stock, not an ETF. So it just kind of tells you were paying for that electrified fence. But at least you're not going to, it's a big difference in buying power of how much, if it went up tomorrow, you would be getting hurt because you'd be down a third of your buying power. Or less, a little less than a third of your buying power. You'd be down. But it's not like you'd be, you could take that kind of a hit. It's not like the end of the world. The thing is you would have to increase, again, moving your strikes. And when you move your strikes like that, how much credit are you going to get to move your strikes? That's the key, is how much credit will you get moving your strikes on this airline stock should it go against you and do the $5 move? Because again, looking at this, we double our ATR. It's about 250 ATR. Okay, because it's trading at, it's a 250 ATR, so you double that, and that gives you the ability to see what your CVAR, your worst case scenario, would be in like 2 days. that means you'd be losing $10. I mean, this thing could do it. Look what that one candle right here went from 64 to 73. So it kind of tells you that was almost a $10 candle. And I don't even think that was that was dividends. Or was it earnings? No, that was earnings. I think that was an earnings move. I may be wrong. But it was a $10 candle. That can happen. Especially now, you got an election season, anything can happen. So, anyways, just look at that cautiously. But I'm gonna look at UAL and just see, if I did this, see now we're trading, we're getting a lot less. I would do this since our spread is 158 to the ultimate credit we could get is 169. 158 is the mid, which is the fair price. I always put my price in something ridiculous. If the market can come to me instead of 165, I'm gonna go 175. And if I get look at that, look at how this thing is moving. It's now it's moving. It's 167 right now, so I don't mind putting the price in at 175 because this thing is moving. It's moving from. The option price is 167, 169. I'm going to do something crazy. Now, oops, one last thing. We're going to analyze what would happen if this thing in 2 weeks. In 2 weeks, this thing goes to November 15th. All things being equal, what is the theoretical? Remember, you're getting $2 a day. So theoretical, just make sure all things being equal, and a volatility crush. Just 1% volatility crush, even though this thing can move. Remember, it can move because in the last 5 days, if this thing went down, look at in the last 5 days, this thing in volatility, net change in 5 days, we're looking at UAL 0.8%. So 5 days, it's 0.8%. That's like 1% in 5 days. And if we're looking at a 1% drop, this isn't like, okay, we're saying like 5 days, you would be, it's showing that all things being equal, you should be making money and not losing it. All things being equal, November 15th. November 15th, you should be making money, and I don't know why it's showing that you would have a loss. Spot price the same. Volatility goes down. Let's just go with the whole thing right here. 1%. I don't know why it's showing a loss of let's see. Would be like a loss of $12. That's interesting because you should be making money on this and not losing it at the price that we have it in at. It should show a let's go back to today and just keep going. Yeah, see, okay, I entered it, and it might be because I didn't hit the enter key, but 11, 12, 13, 14, 15. Yeah, you'd be up $29 in 2 weeks. Okay, and if we went 3 weeks, which is what you want to hold it, say 3 weeks, you'd be up. That'll give you about a little more than 33% in 3 weeks, all things being equal. But remember, this thing can move $5. Okay, this thing can move. When you start the trade, remember you want this on top of this mountain. You don't want him to fall off the mountain. That's the key. Okay, that is the ultimate key. You do not want him to fall off the mountain. You want him on top of the mountain when you're making this trade. That's the whole key of, when you start making money, he's going to be inside. It's like you're on the mountain and then you went into a cave. That just means you're making profit. But when you start this up, you want to make sure that you don't want him falling off the sides. And that's the key to selling premium, because then you're going to get eaten by zombies that are outside of this red, even if it was an electrified fence. But I'm going to put this trade in for 175 because we were up. It was a spread of 167, 189 because this thing is moving. Of course, it's volatile. So I'm going to do something crazy and move this. I don't mind tying up $300 to make 178. I do not mind doing that. Or 175. I don't mind. That's damn near, 40, almost 50%. And if I could get 30% of that, I'm good. And even without that, you're getting more than that 30%. So that's good. Did I send it? I thought I sent the order. Okay. Now let's see what we got on our inventory. How bad is the inventory? I'm not gonna freak. Well, the XSP, okay, yeah, that's moving around a lot. That's why. Look at how, I mean, it's moving crazy. You're just seeing this thing. S&P, yeah. Let's take a look at the SPX. It's moving around like crazy, but I'm not gonna freak. It was defined risk. Micron is the only thing that, again, that might be just because of volatility crush that I'm looking at that going, Micron's the only one that I have a concern about. Not because of the price, it's because of the volatility crush. Or the volatility expansion, not crush, excuse me, the volatility expansion. Because remember, I'm selling volatility. I mean, it's starting to get off the hill. Well, it's not like 20 deltas yet, but it's definitely starting to move off the hill. So it's making me, and why? Look at where SPX is at. What was it down? Let's take a look at it. Where is SPX at right now? SPX is down 91. You got to trade. You got something's up today. We'll see what happens in non-farm payrolls though, because if non-farm payrolls comes out bullish tomorrow, this market could collapse like you've never seen before, especially before an election. This is not what they want to see during an election. To see a 90 some point drop, a weekend before an election. That's not what you want to see. You know, I'm gonna do the thing on the rant channel because I had one going for you guys last night that was a doozy in terms of me ranting about what's going on in the world. Ooh, my God, I have one tomorrow. I was gonna put it on last night. Oh my goodness, and it had to do with something I saw on Caspian Report. I mean, I was watching that. One of my favorite Australian analysis. These Aussies have got that election pinned in terms of the analysis of why certain things are happening. Incredible information. That's one of my favorites. And then I was also listening to oh God, I got another think tank that I was listening to. I have two think tanks, but they're so long I can't do the whole clips on the rant channel with those. Incredible. But anyways, so on our inventory, we're looking at Micron. That's the only one that I'm kind of like going, okay. You got a market that's already dropped 90 points, so we'll see what happens. Micron, let's see, go back to our positions. Micron's the only one. Oh, let's go ahead. Oh, I got two UALs. Ooh, I don't want two of them. I just want one. Okay, there we go. So, man, that XSP is moving like crazy. And a lot of that is because of the fact, I mean, markets are just moving. It's just ridiculously crazy. Overall, we're pretty much flat for today. Yeah, it's pretty much a flat day, maybe down maybe about $1 today overall. So I'm not gonna freak. I'm not gonna freak. I'm just gonna sit, wait it out, just sit, let things just take a deep breath and see. Because I mean, today is probably $1 loss or $1 profit. It's pretty much a flat day, but it is what it is. Anyways, yeah, just giving you guys a little, just the ideas, and we'll see what happens with non-farm payrolls tomorrow. And and remember, I have to get out of SXP trade no later than Monday. I may get out of that tomorrow. That XSP, depending on what kind of pricing that's there, I may just drop the trade tomorrow and just say, hey, it is what it is. Because we have till Thursday to get out, because it's a November 7th expiration. But that's why I gave it Monday, because I'm getting the theta on it. I'm getting paid theta every day on it. So that's why I'm not freaking on that XSP. But I would love to go ahead and it's going to be an interesting trade to see what happens with that. That's buying volatility. Anyways, hopefully that helps. And just, we'll see you guys if you're here tomorrow. Y'all take care.